the last month, basically, right? It's almost December. And during the course of December, right, due to the fact that it will be a holiday season, we will not have as much volatility as, we had during the last few months, right? And also, this technique will, allow you guys to see, that beforehand as well. And with that being said, let us get into the charts. So as you guys can see, today is a bank holiday, right? And we did not have much, you know, to do this week, right? It's pretty much, just one of those times, especially due to the fact that it's a holiday week. It's Thanksgiving and we're getting closer to December, so things, seem to be slowing down a bit. Here, right? You guys can see that we have the S&P 500, the regular, cash data, right? So this is not the futures data, basically the same thing. And I will just be using this, data today because, we will be comparing the S&P 500 and so on with, something else, and we need to see, at least 10 years of data for it to, you know, pop up to us. And we're not going to see that looking at futures, at the futures contracts. So yes, here, as you guys remember, here at this top, there was sequential SMT between the months of the year, which, by the way, are essential for directional bias, right? Even down here, we had the same thing occur, the same thing happened here, right? We had a tracking correlation between November and October here, right? Looking at the top, right, which is here, you're going to see that there is a lower number of, or, a shorter range of time in between, you know, this high and this high right here, right? This high and the swing high right here, looking at the S&P 500. Here you can see that there is a wider amount of time between these two lows right here, right? So this in itself is the magnitude effect in all of its glory, right? And some of you guys usually ask, okay, what if sequential SMT happens like this? Right? The regular sequential SMT, right? It's not going to be as on point as this, right? Looking at the doubling effect of price, comparing each month to, its previous month and so on, right? But whenever, you have sequential SMT occur and then price drops or it goes higher or whatever, and you see it happen within that, same, not same time frame, but with that same cycle, between the same cycles, right? Because it can happen here, especially when we're looking at, we're comparing months to one another. And especially when you have a lower time frame sequential SMT occur, so you're going to have two stages, which happen here, and that's sent price higher, right? Also, there is a sequence which makes this high probability, as you guys can, probably see. At the top, you can see that the S&P 500 failed to break above this high. The same thing with the Nasdaq or the US 100. And for the Dow Jones US 30, right? We saw that price pierced above this high, right? That's what happened here. But this being the, this should be the more animated of the triad, right? The most, this is the breaker asset per se, right? So most times you're going to realize that the higher probability trades, have the Dow being the one that is, most of the time out of line. It doesn't always work like that, and that is the reason why we will be talking about, the new technique very soon. So as you can see, price failed to break below this low right here, while we have the Nasdaq doing so, and also the S&P 500 trading below this close right here, but not seeming to go below this low, right? So in my opinion, this would be a higher probability trade, right? And obviously you enter at sequential SMT and you exit at sequential SMT, right? As we can see that, you know, working perfectly right here. And this is, one second, let me fix this, okay. And this is the four, you know, tickers or charts that you will need for this technique, right? So basically, it's the same thing that you already do, but we're involving a brand new, you know, tool to use, right? We're going to be looking at the volatility index along with the triad, right? So it's pretty simple, but you will realize that just by going through this information, right? And how will you do that? You'll be looking for the same thing that you look for here, right? You look for sequential SMT, you look for precision swing points, but you will realize that the VIX will help you to filter out, all of your bad ideas, right? So for example, this candle right here, I believe it was AC. Yes, there it is. This candle right here confirms that the precision swing point within the NASDAQ is actually a precision swing point, right? And so on. And it would also confirm sequential SMT, right? It doesn't anywhere that you look, right? At the lows, at the highs, right? Whenever you see that we have, a large move, you will find out that there is a cracking correlation there, just like here right now, right? Between this high, between these highs here, you look and you will see a cracking correlation right there as well, right? Pay attention that it's not there, right? If you just look at the triad alone, which is one of the reasons why I, kept this to myself. So I am asking you guys, right? And obviously you're going to get something else, which will go with this and complement it even better than it's complementing the triad right now. You don't have to share this, right? I know I always say that, but people, because this right here actually it will make things easier for you. Just by looking here, you'll realize that it already has, right? Just, you know, use it to the best of your ability. And, you know, there's not a lot of you here, and this is the reason why I chose to wait until, you know, this specific month, this specific time of the year to share this piece of information, right? So here you'll see that the times when you don't see a cracking correlation within the chart, but price seems to turn around, right? Price just turns around and you're like, but there's no sequential SMT, but there's a crack somewhere else. And you're going to find out that it's here, right? And this is why the futures chart is probably the best asset to speculate for me, in my opinion, right? And anywhere that you go in the charts, you will see that it's present, right? So here, right, you see that it's present right here. That's a, 1 second. And this was, I believe this was the COVID crash, right? And this is why I use this shortcut. We need to go back and, just see the main time periods where, this was successful, right? So here you can see it's a position swing point in the VIX, position candle elsewhere, followed by what can you see, right? Remember, these are monthly candles. So between this candle's low and this candle's low, you can see that February did not trade below this candle, right? Here, February did trade above this one, above January, and here, February did trade above January. The same thing happened here, right? So already you can see that that's a two-stage sequential SMT, right? We don't have to go to the lower charts right now. You understand, you know, how to compare the highs, right? Here, it's this. This is not SMT. Here, this is not a cracking correlation. Here, it just seems that price ran up and just dropped, right? That's there is no way that you could, just be looking at the chart and just using the concepts that we talk about and come to this conclusion, right? So here we have the sequence SMT between these months, right here, between January and February, right? Then price dropped. After price dropped, well, you see, obviously there's another cracking correlation, right? Confirmed by the VIX, then price started to go higher, right? And also, I believe that the S&P 500 index is probably if you're a person that you don't mind holding something for 5 or 10 years, then even buying at this, is a good idea. Will eventually be $10,000, right? All of these will be doubled, right? It's just the VIX that will be confined to this small area, right? And it looks, you know, obviously cleaner on the lower time frames. I'm talking about the VIX, right? And here as well, right? You can see the correcting correlation here, right? And you're going to wait, meaning that you're not going to just go in short right here, right? You're going to wait until there is a correcting correlation, right? For you to do anything at all. There's no correcting correlation, there is no trade, there is no directional bias for you at all, right? And this gives you more, cracks. It gives you more opportunities. It gives you, a better way to view price, right? So here again, we spoke about this, right? This is, I believe it was sequential SMT between the Asian session and the London session. Yes, that's what it was, right? Right. I know that you guys understand that, but in case someone leaks this, it will just make it more difficult for them to get, right? So that's why I'm not putting the indicator here, or using any indicator or any lines. So here you can see price ran below this low right here, S&P 500, NASDAQ. This was, your classic sequential SMT. Everyone should have seen that this was sequential SMT, right? And here we have it confirmed by the VIX, right? And as I said, that the higher probability trades will have the Dow being the odd one out. You can see here that the Dow failed to break below this low while everything else did, right? And at other times you'll see that the Dow will break below a low, sometimes most times following the VIX, and you'll see that these will hold their lows or form failure swings, right? So it's something that is very interesting, something that it is powerful, right? And there are other ways where you can gauge volatility. You know you can spot when you'll see a year that will be jumping per se, right? So as for now, you can study that, come back, use it, right? Even though we're heading into the Christmas period, but yeah, still study. Here again, right? We're looking at Bitcoin versus Ethereum, right? Remember, we have sequential SMT here at these lows. We only make an attempt to navigate the marketplace whenever we see a cracking correlation. Here, there's none, right? There's not a cracking correlation right here, which is sequential, right? Still, right? Obviously, we're going to, before heading or being drawn to this low or this one right here, we will see things like this, and even if we fall lower, we'll still see price drop, right? The It's all over the news, right? People short, then their shorts get squeezed because they enter too late. The same thing happens vice versa all the time, right? And the bias is the same, right? And this is what we will expect. Here, you guys can see that we have, the FX triad right here, right? And if, things go how we want it to go, how we are expecting things to go, right? And we see the dollar, for example, right? Let's just say that, first of all, it's not a draw, right? So first of all, we have sequential SMT here. This is a higher time frame, a monthly persistent swing point, right? So it makes sense for us to, expect some consolidation here, right? Get people confused. It's still consolidating, been doing this for months. And if the dollar goes higher, we will see everything collapse along with it, right?